Hello. Well, it looks like I'm finally live. Hooray. I'm just going to send out some notifications and then we can get going. I've completely, obviously, forgotten how to do this, and so let me turn that off. I need to copy the link, and then we can get going. I hope everyone is okay. This is my first time back doing this regularly after 18 months and a brain injury, so obviously everyone's going to need to be a little bit patient while I figure out where I went wrong and why it wouldn't work the first time, and so on. So I apologize for that, and then we will get going. So much has happened. Here we go. Just one more and then I can get going. So, where are we? First of all, I feel like after last year, which was a horrendous year for stock indexes, let's be honest, we've had a pretty decent bounce. Let's start with a weekly chart of the E-mini S&P. And here's our 2022. And here's this lovely bounce that we're in. Now, my problem with this bounce and whether we're going to rally to new highs from here is how this bounce unfolds. As you know, I'm a big zigzag girl. So that means I'm always looking to see whether bounces or corrections are relative to each other, or whether it's an impulse rally that usually kind of unfolds in 5 waves. There's a lot to like about this. I like how it's bouncing off these moving averages, but very often, you know, when you see what looks like a correction can turn into a bigger correction. So we'll have a swing down, and then if this ends up looking like a 3-wave corrective rally, we'll see another swing down before we go up again. So I'm being really cautious, particularly as this took so long to get going. And when I look at this, it looks all kind of 3 waves. So it feels like we've had a 3-wave rally and a 3-wave pullback, and here we are in our C leg. And if that's the case here in the S&P, then, you know, 42.58, maybe we get up to 45.17 before we see another leg lower. I kind of like that because the S&P has a favorite fib level, which is the 786. So when I put that in here you can see we were held forever at this 50% level. But now that we look like we're pulling away above it, see how this equal measured move and this 786 fib line up together? So I wouldn't be surprised at all if in this S&P we did this, and then we did this, and then, you know, either we're going to come down here to the 38.2 and continue up again, or this was our first leg down, this is a correction, and we're going to see another one. So very tricky times. That's big picture though, isn't it? Let's talk about short term where we are, because up until now everybody was like, well, the big risk is not in the markets, it's political, it's to do with the debt ceiling, and now there's this news that the debt ceiling deal has been done. Now, one of the reasons that people thought that the Fed were going to pause hiking, even though we've still got lots of inflation, was because of the, you know, because of what was going on with the debt ceiling. In fact, if the debt ceiling deal had all gone to hell, the Fed, you know, might have had to provide liquidity and not just stop but reverse. So now that's taken away. The Fed's focus is back firmly on inflation. We've just had the PCE deflator last week, which is the Fed's favorite measure of inflation, and that shows that it's still going up. It was higher than expected, and it was higher than the previous month. So inflation hasn't stopped, and it is quite, you know, not all of these indicators are a little bit laggy as well. So now the market has to switch from thinking that there is going to be a pause back to there's going to be a hike, and the next Fed meeting is the 14th, 15th sorry, 13th, 14th of June. And 4 times a year, they also have a summary of economic projections. So we're going to get that in June as well. So we've got that to look forward to. So given that the market we might get a little bit choppy here, and I think we might struggle to get above 42.58. I think we might tag this level, and we might tag this 61.8. It's going to get a bit messy, but you know, that debt ceiling deal still has to be passed through Congress, and that hasn't happened yet. So yeah, we could have a little bit of wobbly week. And then of course we've got non-farm payroll, and the market's going to be looking, make sure there's no kind of stress in the labour market. One of the things that you'll learn from being really old like me is that when you're in a hiking cycle, the Fed or central banks generally tend to keep hiking rates until one of two things happens. Either it works and inflation comes down, which clearly we're not there yet, or something breaks. So when we had all the bank stress, that looked like that could cause a pause. But of course, unless, you know, that all kicks off again, they're going to keep hiking until either inflation stops going up or something breaks, or there's stress in the system. So things like jobs numbers, you know, stress in all those indicators are going to be becoming more important. So that's where we are for now. Between now and Friday, we've got a lot of month end kind of silliness to get through. Month ends can be a little bit tricky. Quite often stuff that's done well will go the opposite way. So for example, in these tech stocks or the NASDAQ, we could see some rotating out of stuff that's done really well. Here in the NASDAQ, for me, if I look at this high to this low, so this is the high in November 2021 to the low in October 2022, and I put fib retrace levels on from this high to low, what I am impressed by is how well all of these levels work. So the 236 fib was a triple top, and then a really deep 886 retrace, 38.2 all the way back to the 236 fib. And then when we got above it, it was support. The 50%, we blasted straight through it, and then it was support, and we kept going higher. And so one of the things about fib levels is if you do blast straight through them, they should be support. The other thing here, so here we are at a 61.8 fib level, which is the NASDAQ's favorite fib. And one of the things about 618 levels is they can be a little bit messy. So that means you can kind of go extend beyond them and still close underneath, and it still counts as they hold. Whereas a 786 or a 50% is usually a very sharp fib level. You know, if you're going to turn at it, you turn on it. You don't kind of wash back and forward through the levels so much. So we could say short term, you know, it would be really bullish if we held above 14,367 here in the NASDAQ, and we'd be looking for more upside, and 15,423. These tech stocks are by far, you know, outperforming everything else. When you look at, for example, the Dow Jones that went down every single day last week, and then the NASDAQ did this. So not overbought on the weekly. We could argue that we are well in overbought territory on the daily, but sometimes you don't always correct in price. You know, you could go sideways above this fib level. So there's huge divergence. Tech stocks are definitely winning, and bank stocks are losing. Let's have a quick peek at the dollar. Now, as you know, I'm a big zigzag fan. So corrections, normally, like you have a rally, you'll have a three-wave correction. This is what I'm looking for, textbook, and then the trend carries on. Sometimes though in corrections, you go a little bit sideways like this. Sometimes you make a higher high and it looks like this, and it doesn't even look like a correction, but it is. And I feel like that's a little bit what we're doing here in the dollar. So we've had 5 waves down, 1, 2, 3, 4, and with 3 waves, we've reversed our weekly moving averages. So normally when you get underneath them, you look for a 3-wave rally back into the moving averages, and then I would be looking for another leg lower. So that's for me where we are with the dollar index. We're in the 3rd leg of a correction. Here's our first leg, second leg, And last week we moved beyond this 61.8 level at 103.91. So for me, that says we've got more upside to come in the dollar up to 105.85 unless we were to close back underneath 103.90. So big ABC. If we take a look at the euro dollar, we're always looking for the euro dollar to concur, because the euro dollar is like 57% of the dollar index. And when I look at this, you know, it looks first glance like we've done pretty nice 5 waves, doesn't it? But this, to me, looks like one big swing, and then this is a 3-wave correction, and one of those irregular sort of flat corrections, they call them. So so I'm going to measure high to low like this in the euro, and say that in the euro we're likely headed lower to this equal measured move level at 1.057, and maybe down to this weekly 50 moving average as well in this one, as long as we stay underneath this weekly 20 moving average, which was previously such good support here back in March. If we were to get back above that, back above 1.077, we would be going up in the euro. But otherwise, I think for now, while the market prices in the fact that the Fed are likely to keep hiking rates, that we are headed lower in this. And so we would have our first swing, and then 3-wave correction, and then another leg higher, I think, in the euro, because the euro's ECB is so far behind the Fed. But that's a long way off. So short term, the fact that the dollar looks like it's got further to bounce, and the fact that the NASDAQ, which has been leading the stock rally, is at such an important level, it makes me think that we are likely around this month end and the next week, or at least to the Fed meeting, likely to have a little bit of a pullback in stock indexes and risk assets, and a bigger bounce in the dollar. So that's where we are with those. I'm not going to do any more futures. I'd like to get on to crypto tonight. So that's what we're going to take a look at. First off, I'm going to look big picture in Bitcoin. So big picture in Bitcoin, for me as a moving averages person, I look at moving averages for really kind of key guides of the trend. And, you know, previously, this weekly 200 moving average that we just talked about in the euro has been impressive, really impressive support for Bitcoin. It was in 2019, it was in 2020, and then for the first time we lost it in 2022, and we've kind of been sideways. And I always said, you know, the one thing we've got to do if we're going to be going up is recover this 200 moving average. So we have found resistance, then we've got above it, and now we're finding support. Sometimes though, moving averages can be a little bit of a tricky signal when they're flatten out and they are going sideways, and the pullback, when you pull back in to test them, sometimes goes a little bit lower than you want. So let's talk about this correction here in Bitcoin, and are we turning up again? I know that everyone's looking at this channel like I am. We've got 2 touches on the top, 2 touches on the bottom. So clearly for me, a move above, break out from this channel and above this daily 50 moving average, which is such a key trend guide short term here, would be a bullish breakout. And you can see that we've reversed this. Normally, when you reverse your moving averages like this, your target, like we did here, is back to the 200 moving average. So if we apply that rule here, our target is back to the 200 moving average down here towards 23,000. I think that this is quite an important low back that we made in December. I don't see that this is breaking, but I'm also not sure 100% but that we're going up again yet. I think we look good on every time frame. Now, as you know, I'm a big fib fan, so if I put my fibs on from this low to high, if I'm going to lean on these fibs, I want to see a really good reaction at the 236 fib here in Bitcoin. And it was a little bit messy, to be honest. It looked like we got a false break above it, and now it's resistance. That 28,100 when we look at it again, is resistance, and it's starting to look like we made a little bit of a false break above it. Now I have a theory of levels. For me, a head and shoulders pattern is the most common reversal pattern you make if you overshoot a level, and that's kind of what we got here. So it kind of looks like, you know, it's a bit of a sloping neckline. I'm not a fan of sloping necklines unless they slope the opposite way to the way they break down. So you can see here that if we were to draw this as a head and shoulders pattern here, head, left shoulder, right shoulder, this is like a back test also of this head and shoulders pattern in Bitcoin. So there's a lot that we've got to get above, you know, to be going up. And if we don't, if we were to do another leg higher, and this actually is, you know, a head and shoulders pattern, then the target would be here, head to the neck down from the breakdown level. Well, and let's measure it from this retest level. Again, that puts us down here in the 23,000s, doesn't it? Back towards this daily 200 moving average. So for a lot of reasons, I like this bounce. I'm just not convinced that we're not quite ready yet. The other thing with Bitcoin, so what does that mean? It just means, like, I've been buying it and trying to buy it and hoping for a breakout and getting out every time it fails, but it means that we should go easy on the leverage and you know, have little buy the dips and see if we can get a swing that keeps going. But it also means, you know, that we shouldn't be too stubborn and we shouldn't be over leveraging until we get that reversal that we need. So the other thing, here's the other thing I look at now. So we've talked about, you know, corrections, and so if we're in an uptrend, you'd like to see a nice ABC and keep going. And, you know, and the thing about these three wave corrections is this wave in the middle needs to subdivide into three. And sometimes it doesn't work quite evenly. So sometimes you'll have a rally, and then you'll have a pullback, and they're like this. But this, what I'm trying to say is that I think this is our first swing, and this potentially is our B leg, and we've got sinks. So we've gone A, 1, 2, 3, B, C, or X, Y, Z, or however you count it. Again, I'm not Elliott Waver's not my first technical crutch, so I would not be surprised, whilst we keep doing these three wave kind of moves, I would not be surprised, this is three waves in the middle here, if we do another swing lower and we go down to 25,000 and potentially we overshoot and get a little bit lower towards 24, maybe the mid 23s, and say hi to that daily 200 moving average again. So what I really do, you know, I think with the halving coming next year, this bottoming price action, I think everything looks really good. I'm just not 100% convinced. You know, I like a CCI here for momentum for when we're turning up again. For me, this is not on the weekly ready to go. Maybe on the daily, but we need to break out. But whatever other momentum indicators you use, so say you like an RSI. For me, you know, this is piffling around in the middle. If I wanted to buy, I'd like to see this come back to the 50 and hold and go up from there. So this is not, you know, whilst we're piffling around here in the middle, not ideal for me. I sometimes look at a MACD or a slow stochastic. Let's take a look at where we are with this. Again, this is looking like a little ABC and like almost ready to top out. So I think we had a really nice move over the weekend. The other thing is, I very rarely trust big breakouts that I see in Asian trading on a Sunday or Monday before the bigger markets are open and holiday weekends. So let's just be a little bit cautious with this and see how far this pullback comes, because there is the possibility that we've just overshot here and we're still in that kind of three wave correction move. If we're going to keep going higher, I'd like to see a fifth wave. So if we look at the short term, I'd like to see one more push higher. And at this point, I'm not going to buy any more Bitcoin unless we break out from this channel, and then I'm going to buy bigger pullbacks. So that's how I'm looking at now. If we measure this first swing like this, we can get up to this 1.618 level and then a shallow pullback that holds this 200 moving average, yeah, and then turns up again. I would look at it like that. But for now, that's really what it needs to do. So not come back too far, not break these lows here, and then turn higher and break out, and then yes, I would have a go at some more. So that's where we are with Bitcoin. Let's take a look at ETH and see how ETH is doing, because big picture in ETH looks pretty good, doesn't it? But I'm a little bit concerned here in ETH that we've got 5 waves up, first of all, so we could see a bigger 3-wave pullback. The other thing I'm concerned about, if I measure this high to this low like this, that this could just be a sort of equal correction. So when you measure like this, it's not lining up perfectly in ETH either, which is a little bit worrying. But when you see a measure this, the 61.8 has to be support. So I don't want to see ETH back underneath 1782. That for me would confirm a bearish reversal in ETH. And the other thing that makes me a little bit concerned is when, you know, patterns tend to repeat. So when we did this first move lower, high to low, we rallied to the 50% and carried on down. And so, you know, markets that do this 50% thing tend to repeat them. So if we were to get to that equal measured move level in ETH, it would also be the 50%. And that could also be quite tough resistance. So that 2,230 in ETH would be 50% of this swing. It would be equal measured move. This would be quite a lot of kind of confluence of resistance. My favorite setup, buying or selling, is a equal measured move back to a 50% retrace. So 2,222 is very important resistance for ETH. Also this swing low. Above that, I think we can talk about a bottom, but that is going to be that on bounce levels. If we hold above 1782, 2,222 is where I'm looking for next. And we can apply this same theory here in Bitcoin as well. If we go back to our Bitcoin chart, let's take a look here on the daily. In fact, let's go regular candles on the weekly. So if we take a look at this first swing lower that we made here, high to low, 38.2 fib, you know, these patterns just repeat. We were still in a downtrend when we did that. And if we go down to this low here, and we look for this swing, sideways at the 38.2, that doesn't apply so much here. But that's, yeah, that for me, you know, 50% of this high to this low, if we make another leg higher, that 50% level will be really key resistance. I don't know why it works like that. It does. But that's what I'm looking for in ETH. And I think ETH is actually better positioned for potentially another swing higher here. We might retest the lows. We are still in this pretty ugly sideways range, but I think ETH at the moment is looking slightly better. Let's look short term at the levels, and if we look at ETH on the 4-hour here, so if this whole rally is just a correction, and then we measure from this low to this high, just like Bitcoin, we kind of overshot the equal measured move to the 1272. So key short-term support is 1843, underneath 1843, we are likely to head back and retest the lows of this range, and we'll see if that holds. So get ready for a bit of a choppy week. And 1843 key short-term support. If I look at this, potentially, you know, we've done 3 waves and we're on our way up, but yeah, I feel like we've got more to come, just because I don't like this spike that happened when regular markets were closed. And I've just seen this movie far too often in Asian trading on a Monday. So that's where we are with that. Hi, Jasper. Okay, I'm going to take a look at some other coins. So one of them, let's take a look at Litecoin. Litecoin's really interesting because, one, I think Litecoin is a really good leading indicator, or it used to be. I don't know that it has enough volume anymore, but it used to be a really good leading indicator for Bitcoin. Litecoin, in other words, Litecoin would go first and then Bitcoin would follow. Now, for me, this is a bit of a no man's land. We're in sideways consolidation. I'm quite interested in what Litecoin is doing, because it's got, of course, it's halving in 70 days. When I look at this, it looks potentially like we've done 3-wave correction, but when your moving averages go flat and go sideways, which let's line them up here, which we've got here, it means that we haven't got a trend unless we break out. So we would need to break out from these highs and above this weekly 200 moving average that is resistance, and potentially, you know, we could do another leg lower from here. But what I like here is the bullish cross of these moving averages. So yeah, no trend at the moment, but today or over the weekend we did have a really nice move back above the daily 50 moving average, which we couldn't hold as support before. It's a big nothing, isn't it? It's just, I think that we're in a middle of a big kind of coiling up triangle here, and we are right in the middle. And when you get a range like this, you kind of really want to be selling the highs and buying the lows, and in the middle you can get chopped up. So I'm just watching Litecoin for now, because I think it's potentially a good leading indicator, because we've seen big 3-wave corrections within these moves. I think that there is quite a good likelihood that this was a first swing higher, this was a 3-wave correction. So like Litecoin would have another leg higher, and you can see this would take us for a third touch false breakout on the top side of this triangle, and then, you know, gosh, we could come up here and end up doing a 5th wave, couldn't we, or an E leg before we break out. So let's see, I am short term. If you're looking at Litecoin and you'd like to get a little ahead of this halving, I really want, it really needs to give us a buy signal against this daily 50 moving average like it did here. And so on lower time frames, so like I'm going to look at this on an hourly, daily 50, hourly 200 moving average. As long as we don't head below that, I think that that would be a good look. Now, just like ETH, this would also be the previous swing low. So we could see a little bit of chop this week, and then, you know, but that's, for me, around 89 would be a good place to look for a buy trigger for Litecoin for another move higher. ADA was another one that I have been, sometimes is a pretty good leading indicator, and ADA has unfortunately stopped. Let's go to the daily. I get lots of questions about ADA. So again, ADA, now rallying from a really nice bottom of the channel. I'm going to tidy up my chart here, and we'll talk about where we are at and why we could see more upside, but we're at resistance. There's mixed signals here. Again, like Bitcoin, this is a bearish cross of these daily moving averages. So unless we get above this daily 50, we are more likely to come back and retest the lows than go higher. However, for the first time since April, we have managed to get above the daily 20 moving average. So if we're going to keep going higher, we shouldn't go back underneath it again. So we shouldn't go back underneath 0.37. But for now, this is not enough of a buy signal. What I also don't like, let's go and look at it on a 4-hour. I don't like how this looks like corrective and then 3 ways back and then equal measured move. That's where we've reversed at. So if I measure this low to high, project it from here, I'm going to move this up and say back underneath, a close back underneath this 61.8 in ADA, which is 0.372, would be bearish. And as long as we can hold above that, I'd be looking for another leg higher, and this to be 1, 2, 3, 4, a fifth wave. That would be much better look for me. So ADA has potential as long as we stay above 0.3725 and no close underneath it. Not quite, again, still choppy sideways, not quite. We've got a first swing. I really do like to see 3 waves in a correction like this where possible once it bunches up. So that means 1, you know, and then like this. So not quite ready for me yet in ADA. Let's take a look at some that have been doing really well. TRX is one of them. I do kind of, this actually is much more interesting. Let's take a look at this on the daily. Really nice double bottom, really good level in the pullback in TRX. This was 1, 2, 3. This swing was 61.8 of the first swing, so that's very common in a correction. Look, and this is proper bottoming. You know, we had third touch, false breakdown, so we had a swing failure, double bottom here on the weekly, and we have broken out of the sideways range. So when you have a double bottom, you need to break out of the highs, and then you usually go, like old-fashioned technical analysis says, you would go twice this distance. So you would go from this low to this high. This would be your traditional breakout target, 0.099. And you know, you really kind of want these range highs. You don't want to pop back underneath them at 0.07. So this is another one I think is worth stalking, another leg lower and a buy entry. Even if we just get to these swing highs at 0.93, that is potentially a really nice trade here in TRX. The other thing that makes me think that we've got more upside and may have a bigger bounce coming is when you think you've got a big ABC like this, I put my fibs on both swings and I look for the 236 fib. And here we are, funnily enough, going sideways at it, 0.077. Was this just a false breakout and no close above on the weekly? Yeah, let's hope not. So at this point in TRX, this is not a buy here. We are at very important resistance at 0.077, and we would need to see it come back and hold these previous highs in 0.072 if we're going to continue higher in TRX. So important resistance in that one. LIDO, LDO is another one. That's had a really interesting week. Let's take a look at, I thought I had it here, 1 second. Here we go, LDO. Had a pretty nice day. This is LDO tether. Let's look at this on the weekly. Get my mouse back under control. So key question for me is, are we done here by holding this weekly 50 moving average? I really like how we are back above this daily 20, because I think that potentially we're in a little bit of a descending channel here. If I line up these lows, the first target then obviously is going to be the top of this channel, and see if we can break out of it. And above that daily 50, that weekly 20, sorry, and above this daily 50 today, does point to more upside and potentially another leg higher in LDO. So for me, that daily 50 is at 2.11. So here, short term, as long as we hold 2.11, which is here, we're still going up. It's got a little bit choppy though, hasn't it? Wouldn't be surprised actually if we came back and retested these lows again. But this is definitely, if we have that daily close above here, this is definitely one that I would be buying pullbacks in and looking for more upside, because I think that this is probably wave 1, 2, and we've just done 3. I'd be looking for that wave 4 and back to here and buying for that bigger swing. So that's where I would be looking for. And that bigger swing and the top of the channel should take us up to 2.35, and then if we can break out there, happy days. Next leg higher underway in LDO. Finally, just short term though, if we are going to keep going higher, we really do need to really hold above 2.08. 2.08 ideal place to pull back and buy to. So a buy signal for me, okay, I look at short-term moving averages. So for example, say I had a level down here. I didn't, but you know, say that I did. I mark my levels, and I look for a cross of low time frame moving averages. So here on the 15-minute, we got above them, 3 wave back and back up again. So for me, that would be a buy signal. I really like Heikin-Ashi candles. They are a moving average on candles. They change color from green to red, so it makes it a really simple signal, and it's a really easy way for you to see where it stops going up. So here you can see this is pretty nasty. This is a typical retest of a level, crypto level here. Didn't make a new low, but it was certainly a bum squeaker. It's now bigger picture on an hourly. You get obviously about a choppy sideways. For me, whenever you are trading counter trends, so you're trading that short low time frame cross over moving averages for a reversal, your first target is always back to the 200 moving average, and then if you get above the 200 moving average, you're trending higher. For me, on any time frame, the 200 moving average is the like king of the chart. It's for trend. Above the 200 moving average, you're going up in a bigger uptrend. Below it, you're in a bigger downtrend, and I apply that to whatever time frame I'm looking at. So for here on the hourly, you know, we're in an uptrend, we're above the hourly 200. We're in an uptrend here on the 4 hour, and we had a very nice pullback retest to the 200 on the daily. So all of these are lining up for more upside in LDO. Okay, let's take a look at, first off, I've got a request. Actually, let's take a look at INJ. This is another one. It's really kind of outperforming at the moment, and makes me think that we've got another leg higher because of how the correction has unfolded. Now, usually when I think I've got a 3-wave correction, I put my fibs on both swings. And when I do that here in INJ, it kind of was messy at the 236 fib. So that means it's not kind of properly, the market's not looking at. When I put this swing on, you can see we rallied to the 50% and then we carried on lower. What if I look at this swing this way after this 3-wave correction? Because here we are again at this kind of 50% level. And that's always a bit of a concern, because when you've got that 50%, then you look for 50% back, because a mean reverting market tends to keep mean reverting. And looky here, that 50% was exactly the low. That's one of those things. When you reverse at a 50%, you mark that 50% back, and that's where you look to buy. If we go down to the hourly and we look at this, you can see that's exactly what we got here. That 50% level was it. And we got an hourly, what, 3 tests and then reverse. We put our Heikin-Ashi on, go back and look at it. Got a pretty nice reversal here, didn't we? Up, we got above the moving averages. So here, that, if you didn't buy here, this is your next buy. Okay, I just got a message. I'm just trying to... see what the request was. So INJ, let's go back. I'm going to take away this bigger fib. So here on the daily, again, one of my fears is, you know, this 3 waves back to a 50% is always a little bit of a concern. So 7.44 is really important resistance here in INJ. If we can close above this, then this daily 50 should be more upside and we will have finished our correction. I'm going to put that bigger 50% on because that may come into play next. So key support 7.25 and the daily 25 moving average, and this 50% level at 7.7 next upside resistance. Still trending higher. Just watch out for that 7.77. We can call this a bottom then after our 3-wave correction if we can get above 7.77. If we don't, if we get stuck there, or if we get stuck at an equal measured move, then it's potentially one of those bigger corrections underway. So, you know, 3 waves, 3 waves, 3 waves, and we would be looking back to the 200 moving average before we go up again in this one. I always get nervous when I can count 5 waves, which I can here, because quite often that means back to the bottom of wave 4, which would be quite a long way back from here. But in terms of moving averages, as long as we can then hold above these daily moving averages, if we can push above this 50 and then find support from these daily moving averages, which that would be a good look. But at the moment, we've got a bearish cross and we might get into a little bit of trouble here. So in INJ, I would say be a little bit cautious. We could see one more push higher, but 7.77 could be a little bit of trouble. And I would be keeping an eye on that one. Okay, I have got a request to look at coin rad. Here we go. This is a bit unfortunate, this chart now. This is radical. Now, clearly when I put my fibs on from this high to low, we're nowhere near this 236 fib. If we are able to bottom here and we continue higher, 8.22 would be my first, and these swing highs and lows here, maybe 9.5, 8.22, 9.5, they would be my first upside target. But at the moment, it doesn't look, unfortunately, like we've got a bottom. So when I put fibs on, I either put it on the whole swing or I put it on the most recent 5-wave swing. I don't like to kind of pick random points in the middle. So this is the lowest low. I'm going to put my fib on from this high to low. And the problem here on the weekly is we really didn't get a close above this 236 fib that held, did we? We went all the way up to the 50% in a big A, B, C, and then back underneath this 236 fib again. We do have a bullish cross of these moving averages, but this needs to bottom, and I'm not convinced, for me, that it's done that yet. Now, shorter term, it's at a really good level. sitting on this 200 moving average. And this 200 moving average previously has been really good support and resistance. Look, resistance, 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 got above it, support, got above it here, support. We've been back and forward through it. It would be a pretty good look if this was to hold. But, you know, it really does need to turn up from there. And again, I'm going to go short term. So this is our most recent swing lower. If we turn up higher from here, first upside target would be 2.88. If we can't get above that, we're still in a downtrend. And it needs to give me a better signal at the moment. Doesn't. I think, so again, you know, we've said lower time frame, bullish cross of our moving averages. If I go down to the hourly here, we're holding underneath our hourly moving averages. Now, potentially, this looks like 5 waves up, potentially, so 3 waves back, and we could see another swing higher. But I'm neutral in this one, unless, yeah, above 1.9. I think we could see that bigger swing and then up to this 2.8, but holding underneath 1.9 says we haven't bottomed yet, unfortunately. Okay. So that's where we are with crypto this week. I know we've had a really bullish bounce. I'm struggling to see why the debt ceiling would be bullish for Bitcoin when that potentially means that we have got another rate hike coming, which has not been good news for Bitcoin. Now, when the Fed does pause or pivot, it's going to be for 2 reasons. It's either going to be because everything's okay again and inflation's under control and everything can rally together, but it could also be because everywhere's tripped into a recession or the jobs market or whatever is broken. When that happens, we really need Bitcoin to start outperforming other markets and other risk assets. I'd be really excited to see that. So yeah, for now, I think that we need to see this correction hold a good level and turn up again to have another go in buying. Because I am quite bullish bigger picture, because I think we made an important low at 15,000 in Bitcoin. I'm not selling these, even if they look bearish. I think it's catching pennies in front of a steamroller and you're likely to get in trouble. I would much rather, because I am more longer term bullish, keep trying to buy dips and trying to catch the really big wave that keeps going. So I am not a seller of Bitcoin. I'm still a buyer of dips. I'm just not 100% sure that we have bottomed yet. And I would definitely like us to be breaking out of this channel or flag and on our way up again. So that's what I'm looking for. I know a lot of people, here's the thing. I'm a trader, okay, and a lot of people will tell you for Bitcoin, you know, hodlers will say, oh, you know, do that average thing where every month you buy some Bitcoin no matter what the price, and build it up. I think as a trader that you have to learn for the market to pay you. So for me, every time a asset does really well and goes up in value, you should be taking some profit and paying yourself, and buying dips, and keep doing that and rinse and repeat and pay yourself. Because I've seen, you know, we have got a big bull run coming and a lot of people are going to buy, and what happens is people stop recognizing when it's topped out and when it's going to be going back down again, and don't pay themselves. And I don't want people to get stuck like that this time. So learn to trade, learn to recognize when a trend is reversed, and thanks for joining me. So I am starting my strategy group again after 18 months. I will send out a notification and let